All right, all right. It's been a minute since I did a Ask the Trader session. All right, happy Friday, and welcome to, excuse me, Ask the Trader. So the format of Ask the Trader is any question that you have regarding the stock market. I want you to put it in the comment section, and I'll try to answer as many questions as I can during this session, depending on how many people come on. I haven't done an Ask the Trader or a live session in a couple of months. All right, so I'm trying to get back into the groove of things. I know it's the summertime and the market has been extremely volatile at this time. Uh, but I'm gonna analyze any stocks that you have available for me. Just make sure that when you post that stock that you want me to analyze, just make sure that that stock is at least $1 billion in market cap, so I will be able to talk about it. All right, because I have a lot of people that are watching these videos, so I can't really talk about stocks that are about $1 billion or less. Like I said before, just go into the comment section. Again, happy Friday. I know it's the summertime. We're out and about. The COVID levels have gone down, but the stock market has gone down as well. So let's go ahead and get to it. I'm trying to get back to the swing of things. So I don't even, I'm trying to get used to this technology again. So let's see if I do this correctly. All right, cool, cool, cool. So I am a full-time day trader. My name is Joel Harrison. Everybody knows me by my business, which is what would Joel do? I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years and over 25,000 hours of trading and investing experience. That's what you get with me. And anything that we talk about today are the opinions of Joel Harrison. All right. So I am a full-time day trader. So what makes me different from everybody that's out there? Simply that I'm actually an investor. All right. Most people that are out there that are teaching, this is a very lucrative business, and a lot of people have not put in the time or the effort to actually make money in the market, to actually understand the market, to actually have a strategy in the market. And I didn't even decide to educate individuals until I actually made a little bit of money. Right. So over the last 10 years, after accumulating a lot of wealth and a lot of knowledge in the market, I decided that I was going to give back to you guys, and I was going to try to make it. I was going to try to make you guys see the market in its most simplistic way, because investing and trading is actually pretty easy if you know what to look for. But if you're following individuals, if you're listening to your Uncle Ted, or listening to other people that are not invested in the stock market, B, have not put in the time in the stock market, C, they don't want to show you any types of results that they're doing, chances are that's probably why you're struggling, because you don't really know who to talk to, who to listen to. And believe it or not, guys, I'd rather you go on CNBC and listen to all of these pundits that you guys hate talk about the market, because at least with them, they're actually trading money. They're actually in the market. A lot of them have their Series 6, Series 7's license. And I'd rather you guys not go on YouTube and listen to other people or go into different rooms. And I could also fall in that category, except that I show you guys exactly, what I'm doing, what I've done, what I'm invested in, how I've made my money, how I've made my wealth. And I'm rare. All right. I always tell people that I'm a unicorn. It's not often that you're going to be able to hear somebody explain the market. And if you need personal one-on-one coaching, you can book a one-on-one consultation. I know a lot of you guys are like, oh my God, I never really talked to a millionaire. I never really talked to somebody, and it can be overwhelming and it can be a little bit stressful. But I'm just like you. I know I got on the Tom Ford shades, but I'm here to help you. And I want you guys to take advantage of that time when I am available. Now, I'm going to be off for the whole month of July. So if you're trying to do a consultation in July, it's not going to happen. I'm going to be on vacation for 30 days straight. But while the summer is in and I'm not Ubering my kids to and from school, I am open from Mondays through Thursdays, 11 a.m. till 6 p.m. If you need to book a consultation and you're struggling in the market, and I don't care what subject it's on because I teach price action. I train Forex traders, futures traders, stocks, options, crypto, doesn't matter. And I'll show you guys how easy it is to analyze a stock just by taking some of you guys as examples and showing you guys how to approach the market. So me. All right. So, welcome to Ask the Trader again. I'm just waiting for more people to join because it's been a minute since I've done this. Most people knew to log, most people were logging in every Friday because they knew that this video was coming out. And then all of a sudden, Joel was ghost, right? But I'm trying to get back into the swing of things. So, welcome to Ask the Trader. All right, so we're gonna focus on high level simplicity today. I know when you take my classes, when you get educated by me, some people are like, that's it, Joel, that's it. It's really this simple. These are the only little things that I need to look for to trade the market. And believe it or not, it is. All of that extra information, all of these tens and $20,000 that you guys are spending to learn how to trade the market, you're wasting your money. I keep telling people that. All right. Investing and trading in the market is mad simple. Most of you guys already know how to do it. It's just that you need to learn risk to reward. You need to learn, the platform that you're looking at, right? And then once you get all of that together, investing and trading is easy once you're able to separate the three, right? So many people look at the market one different way. I mean, one particular way, and you should be looking at the market three different ways, just like you would with real estate. You can come into the real estate market, and there's so many different ways you can approach real estate. I can flip houses. I can be a real estate agent. I can be a home inspector. I can be a loan officer. I can be an appraiser, right? I can be a long-term investor. I can be a passive income. Like I can buy rental property and rent those properties out to make money. There's so many different ways to approach the market, and so many of you just didn't know that. You just thought, hey, I just buy this stock, it makes me a whole bunch of money, and then I go about doing my business. And it's not. And I try to teach you guys how to look at the market three different ways: intraday trading, swing trading, and long-term trading. And you should have different accounts to do so. And if you want to be a well-rounded individual, a well-rounded trader, investor, I honestly believe you need to be doing all three if you're trying to obtain wealth. All right. It's rare. Actually, I'm not even going to say it's rare. I've never met a trader, a day trader that was able to reach, millions of dollars just day trading every day. I just never have. Now, I've met traders that were able to trade, take some of the profit they make, invest in the market, and then hold those investments over the years because, I fall into that particular category. But I've never seen anybody that just trades. Now, I've seen investors, most of us that are investing are going to make money in the future, but we have time. If you guys are just getting into the market, and it's only been 1 year and you're wondering, why am I not rich yet? Because you got another 9 to 10 years before you become, with the money that you put in the market, it's going to take you about 12 years to get to that millionaire status. And you got to get through what we're going through right now. So my job is to try to teach you guys high level simplicity so that you guys will stop jumping off the bridge when you see markets doing what it's doing today. What's happening today, yes, we haven't seen the market sell off like this, in a long time. So I'm not going to say that what we're seeing today is normal, but even within the last 12 years, I've seen the market sell off 20 to 30% three times, actually four times in 10 years. So can we sell off more? Yeah, but this is an investing period. And if you're trading the market, you probably should be getting in and out the same day because things change day to day. You swing traders, which is the laziest way to trade, buying and trying to make money in the next 3 days because you got a 9 to 5. You guys are losing money because of what the market is doing. When the volatility gets above 25, you should not be swing trading. I keep telling everybody that this is an investing period. Okay. Once you're in the market for a while and you start understanding the volatility index and watching it and knowing how the temperature changes, you're going to start understanding when to put your foot on the gas and when to start taking a little bit of profit. All right. And that's where I come into play. All right. I know a lot of people can't stand my my blunt, and I don't sugarcoat anything. When people come and they do consultations with me, I'm there to hold your hand, but I'm going to tell you realistically what's going on with you, with your strategies, and how you can get to that next level. I don't have time to, talk about life and this, that, and the other, right? I want to make sure I get you guys as much information as possible. And yeah, we can go hang out on the golf course and talk about stocks and this, that, and the other. But my job is to make sure that you guys understand how to look at the market like a true trader investor. All right. And again, I'm rare. You're not going to find too many people that are doing all three, that's educating, that's focused in the market, that's working harder than you. All right. And I want you guys to try to start falling in line and learning what to look for when you're in the market. So I want you guys to use the what would Joe do method. All right. The what would Joe do method is not glorifying me. All right. The what would Joe do method is the ability to ask yourself what, when, where, why, and how with confidence. So many people come to me and they're like, Joel, what do I do during this period? Well, what the heck are you trading or investing? Apple. Well, when do you plan on, trading this Apple? Well, I only got time during the day. Okay. All right. Where are you going to do it? What platform are you using it? I don't know. Well, that's important. Why are you trading or investing in Apple? I'm in it to make a whole bunch of money. All right. Well, how much money can you make? I don't know. That's where you come into play, Joel. And that's where I get frustrated, because a lot of you guys can't answer these questions. I can easily say my sons bought Apple because they're investors and they're going to hold it for 20 years. They don't care how much it costs right now, because in 20 years, it's probably going to be higher. It's so easy for them to go and buy a share of Apple. And I had so many people come at me, Joel, how come you have your sons buying Apple at this time during a market where it's going down and inflation is up and there's a war in Ukraine? And I'm like, because you obviously ain't a trader or an investor. You only see the market one way. I'm probably talking to a trader that can only get in and out of the market the same day. Yeah, of course, I'm not going to tell my kids to buy Apple today if they need that money today. But you guys don't look at the market that way. You see the market falling and you're afraid and you're like, I'm not going to buy. Well, what's your strategy? What, when, where, why, and how? The what would Joel do method is a method of asking yourself, why the hell am I even buying this stock? And what is my strategy? And if you can't answer those questions with confidence, you probably shouldn't be buying it, or you probably shouldn't be trading it. If you don't know how much you're risking, you probably shouldn't be buying it. All right. And that's where 99% of you adults are having issues. You guys are adults, master's degrees, doctorates, and you guys can't tell me a simple plan for your Apple investment. My kids know theirs. Dad gives me $100 a month. He says, I don't care what the market is doing. I got to buy something with it. Why? Because you're young. I don't care if it goes to zero, because chances are by the time they get 30 or 40, that stock ain't going to be zero anymore. And even if my sons lost all the money that I gave them in the next 3 years because the market plummets and drops 90%, if they continue to invest in the market, at some point they're going to catch the bottom. And that's where you guys do not understand how to create wealth. And that's where I'm trying to get you to. We're going to get to your stocks, I promise. All right. So I want you guys to understand that investing is a lifestyle. It's a lifestyle. I've been saying this for years. Most people didn't understand it when I used to tell people that. I used to tell people that if you wanted to be an influencer, get into the stock market, because the stock market Out of all the different industries that's out there, I can literally touch any and everybody that's out there. It's the most brilliant place to be in, right? Because I can have conversations with athletes about apparel and Nike and Under Armour. I can go into the biotech field and talk with my doctors about different things. I can go into real estate and talk about DR Horton and Simon Property Group, right? I can talk to my financial gurus and talk about banks. I can talk about commodities with my commodity traders and talk about oil, right? So being in this market actually makes you become a very, very well-rounded you really start understanding the way that the world works. It's the building blocks of everything. Investing is a lifestyle. If you start making it a lifestyle and start understanding that investing is not an option anymore and that it's essential, that's when you're going to start making money. All right. Wealth is built from investing. It's not built from trading, people. Stop being lazy. 90% of your income, 90% of your assets should be invested, even during this period. This is the investing period. I keep telling you guys, this is the time to invest. I've been saying it for 6 months. This is the time to rebuild. You know, when sports teams win a championship and then everybody gets paid, and then all of those different people go to different teams, what do they always say? All right, this is a rebuilding period for the team. Everybody and their mama understands that. But when I say it's a rebuilding period for stocks, people want to shoot me. Joel, how dare you get people into the stock market? And I'm like, okay, you obviously are not a millionaire. You obviously don't understand money and how to make money investing, because I like to buy low and sell high. I don't like to buy high and sell higher. That's trading. And once you guys start understanding that, you're going to start understanding that investing is a lifestyle. All right, start investing. If it's too much for you, lower the amount of money that you're investing. If you can only invest $50 every month, fine, do it. All right, $50 a month, $100 a month, $200 a month, 1,000. Don't worry about, unless you need that money in the next year or 2 or 5 years. You should be investing in the market, because we're going to recover from this period. And just like all the other times we hit lows and the market hit highs, I don't want you guys to miss out on it. I see you guys miss out on everything. Y'all missed out on Bitcoin. Y'all missed out on Tesla. Y'all missed out on Nvidia. You missed out on Apple. And these are just stocks that I told you guys to buy. You guys missed out on Square. You guys missed out on everything. And you keep continually missing out because you keep continually listening to scared people that don't know how to invest. And all they want to do is put their money in the market for the day and then take their money out. And they're comfortable with doing that. And they're in the same position that they were in 10 years ago. I promise you, any trader that hasn't invested are in the same position or worse than they were 10 years ago. And I'm all about building wealth. That's just what I'm about. If I hurt your feelings just now, I don't care. You need to hear it from somebody that's willing to look you in your cornea and tell you what you're doing ain't the right way to do it. All right. You got to start setting up your investments now. 90% of your assets should be invested. 10% of your assets should be traded. You got $100,000. Don't come to me trading $100,000. You should be trading 10. So that if you blow up the 10, you still got 90. You guys are doing the opposite. You're investing 10 and then you're trading 90 and then losing all 90. And now you got to work for another 15, 20 years. All right, flip it. You're doing it the wrong way. You guys are scared. Quit being scared. Fear. Fear is the reason why you guys cannot get wealthy. Fear. You think it's being intelligent. Man, I'm so smart. Look, the market dropped 20% and I'm not invested in it. I am so smart. No, you're not. Fear is what's going to keep you from becoming a millionaire. It is. It just is. Or if you are a millionaire, it's going to stop you from making 10. And if you got 10, it's going to stop you from making 100. Okay? Fear. Fear of losing. You worry so much about losing, you can't win. You worry so much about, like, Joe, I'm going to lose all my money. Yeah, you're going to lose all your money if you're in options and there's an expiration date. Yeah, you're going to lose all your money if you hanging out with your friends buying penny stocks. Yeah, you're going to lose if 99% of your assets is in cryptocurrency. Crypto is going to fall, guys. I keep telling y'all it's a crypto winner. Does it mean that Joel's not buying crypto? Nah. Remember, every asset class that has blown up, Joel Harrison has made money off of it. I don't care what it is. And you can find a post in the room where you see that I made money off of it. How the hell has Joel made money on everything that everybody said you can't make money on? Because I know how to invest. Okay. And I'm trying to teach you guys how to do it too. It's very simple. You don't put all your eggs in one basket. I did that before and I lost everything. Right? Yes, you can make yes, if I had all my money in Bitcoin and it went up 10 times its value, I'll be richer than I am today. Yeah, but at my age, I can't do that. At 40 and 50 years old, you guys shouldn't be going all in all the time. You should have been doing that in your 20s and 30s. Too late now. You got to be a little bit conservative, but it doesn't mean you're not invested in the market. Anybody that's not buying right now investments, you don't know how to invest. Yes, the market can still go down, but you should be buying something. There's something out there that you should be buying. If you don't see absolutely anything, you don't know how to invest. You just don't, because everything around you is overinflated except the stock market. Real estate is too high. Paintings are too high. Cars are too high. Businesses that you want to buy are too high. What are you buying? Everything is overinflated except the stock market. The stock market is down 30%. Some stocks are down 70 or 80%. If you are a smart investor, you should be picking at the stock market because it's going to turn around first, and then everything else is going to make money from it if you understand the rotation of money. Okay. All right, there's a 90% chance that a stock will eventually go back to its highs. Now, guys, there were a lot of COVID stocks that probably ain't ever going back to their highs. All right. But there are a lot of solid companies that should go back to their highs. Amazon, Google's, Facebook's, at some point, they'll probably go back to their highs, right? And especially your semiconductor companies, your Nvidias, your AMDs, your Microns, your hotel companies, your casino companies, anything dealing with, like Live Nation, Ticketmaster. Once the economy opens up fully, we get the war over with, oil starts to come down. Most stocks should go back to their all-time highs, but there is a rule that there's a 90% chance that the stock will eventually go back to its highs. So you guys got to understand that when a stock falls 70 and 80%, if it ever goes back to its highs, you're going to make a 400, 900% return. And yes, it might take a year or two to happen. This is how I make all my money. I don't make my money sitting around in stuff that only goes up 10%. Don't bring a 10% company to me. I ain't never met nobody who got rich off buying, the S&P or the NASDAQ, unless they had $1,600 that they were putting into the market every single month. That's the only way that you got to $1 million in less than 20 years. And it took you 16 years to do that in a market that was exploding to the upside. So what you going to do when the market starts going flat and you're not going to get the kind of returns we got in the past? You going to wait 30 years to get to become a millionaire? And a market where everything else around you is going up, y'all are listening to the wrong people, especially if you're young, right? You got to get a little bit aggressive, but you shouldn't be aggressive with your whole account. All right. You got to make a 10-year commitment, period. Make that 10-year commitment to yourself. And that sets up the strategy for your investment, right? I tend to want to buy companies that can grow, 10 times their value. But I want you guys to understand that investing and trading is easy, but a lot of you guys make it hard. I know I'm hard on a lot of you guys, and I hit home with a lot of the stuff that I'm saying. I had people hit me a messenger, Joel, I can't believe you were talking directly to me like that. We had a conversation, and you just said you weren't going to talk about what we were going through, and I'm like, I wasn't talking about you. right? It's just that 99% of traders and investors have the same feelings that you have. And I know I can make you feel bad about some of the decisions you made, but you guys got to brush it off, lick your wounds, position yourself the correct way, especially in a market like this, and keep it moving. And understand that the market is not going to always be down. It just isn't. All right. There's going to be a time when the market goes up again. All right. But even with the SPY, I show people all the time, even with the SPY, that was averaging 13%. And this is like the most conservative approach you can take with the market. Unless you got $1,600 that you putting into the market every single month, it took 16 years in a market that was exploding to the upside to get to $1 million. So yeah, you can be conservative, but this should be, if you're young and you're trying to get here and you're trying to get here fast, this ain't the way to go. And I keep trying to tell you guys that. And yes, with these volatile stocks, they're going to go up and down. They might be up 30, 40, 50%. I get it. I get it. I get it. I get it. All right. But that's why you need to learn how to position yourself. No more than 10% of your money should be in any one stock, and you need to protect yourself, and you need to continually buy things over and over again. You should have that should be your strategy of achieving that wealth. All right, we're going to get to your stocks now. All right, I spent 30 minutes. If you haven't downloaded the What Would Joe Do app now, it's free. Go ahead and download it on the Google Play App Store. It's free. I do have a membership service. In that membership service, you will, if you do the $49.99 a month, you get access to all the videos that I've ever created. All right. And most of my videos are timeless. You can watch a video that was created 2 years ago, and I'm so consistent, I'm still talking about the same thing. I might add one or two little things. Like recently, I've added the 513 strategy that I'll talk about today. Or you can go, if you don't want to go through the What Would Joe Do app and you want to buy videos straight up, you can always go to my PayHip. When you go to payhip.com, What Would Joe Do, you'll have a list of all of my videos. You can buy them individually, stocks, options. If you're interested in the stock market, if you're a newbie, you just want to buy something to just teach you the basics of the market so that you can follow along with these videos. We're going to talk about futures today. If you want to learn about day trading and making $100 a day, if you're into options, if you want your charts to look like mine, or if you're just into technical analysis, I have videos for everybody, including your kids. All right. And last but not least, my ultimate membership, my baby. This is what I give. This is the best value you're going to get for anything, because you get every single video that I have as long as you're paying that $49.99 a month. You're also going to get alerts. Usually you'll get alerts daily if I'm intraday trading and I see trades that can go to the upside, but you got to learn about average true range, and you got to learn how to take that information and know what to do with it. And that's why you got to do a one-on-one consultation with me. If I'm buying or selling things, just 2 weeks ago, I literally caught the bottom of Amazon. I put out an alert to all my members that I was buying Amazon, and I bought 2 other stocks, and all 3 stocks the next day, for the next week, made money for you. And I rarely will tell people when I'm buying big purchases or big swing trades. And when I do, usually I'm right. So I made a lot of people money on that Amazon stock split, but you get that through the membership service. All right, but there's unusual options activity. I haven't really been doing much of that because the market's been going down and I haven't really seen any really good swing trades. So right now, members are taking advantage of the day trading aspect of it. What's hot today? And if it hasn't moved its full ATR, you can take a shot at it. And we'll talk about some of my day trading strategies when we look at some of your stocks today. All right, cool. Now that I've gotten that out of the way, let's look at your stocks. So what I want you guys to do is I want you to go into the comment section. I'm going to start going from the top to the bottom, answering every question that I can. And any stock that you guys have that you want me to look at or analyze, if you can just give me a brief description, like if you want me to look at it as a trade or as an investment, and it's the early bird gets the worm. I don't know if I'm going to get I know usually I get the everybody stock. I don't know if I'm going to get the everybody stock today because, again, I want you guys to be a little bit more specific in what you want me to analyze. And I'm going to teach you guys how to take that information, process it quickly so that you know how to answer those questions: the what, when, where, why, and how. All right. So let's get to your stocks. And again, we're gonna focus on high level simplicity today. Okay. So let's get to some of your questions. All right. So how am I gonna do this? I might take the banner down. Let me take the banner down. I'm gonna take my picture down as well. Actually, I'm gonna leave it here so that we can see your comments. And let's get through your comments. All right, Craig said, "What's up, Jay? Market is good and volatile." This is a day trading paradise, right? You can make loads of money if you get in and out of the market the same day. But we're in that type of environment now. It can change in the future. So you are definitely right about that. David said, "Should we buy Amazon now, or is it going to drop some more after the split?" All right, so let's look at Amazon, right? So we're going to come back to the SPY, but let's look at Amazon. So what I like to do is when I'm looking at Amazon, that question is actually a little vague. All right. Why did I say that it's vague? Because you gave me a question, but we don't know the time frame, right? Are you saying that it's going to drop some more in the next 2, 3, 4 weeks? Or is it going to drop for the next 2, 3, 4 months? Well, what I like to do is when I look at this 200-day moving average, one thing that we just noticed that we did not want to happen in the market is we did not want Amazon's 200-day moving average to start going down. Oh no, we don't want that, because now we're in a bear market. All right. Another thing I want you guys to understand is that when the VIX, there's a value when the VIX is at 29. Their values that I always tell you guys to look for. When the VIX is right around 30, that's usually when you should be investing in the market. A stock's beta is going to be 2 to 3 times more, right? So if Amazon has a beta of, let's say, 1.5, I automatically know with this type of volatility, 1.5 times 2 is going to give me 30. Amazon's going to drop about 30%. Okay, give or take. If you don't understand what I'm doing right now, you guys need to take my beta times volatility video. It teaches you how to take the VIX and take the volatility and get an idea of where a stock can drop. So if I know that the volatility is at 29 and we're going down, I know that the sweet spot of buying Amazon should be in that 20 to 30% range. So when you look at Amazon, and let's look at, we see that the 200-day is going down, and we're going to use a chart that Noble loves to use a lot, and I've been using it a lot lately too, and that's the week chart. But let's look at the week chart so that we can look at a cleaner chart. So looking at the week chart, what you're looking at here is that's the 20-day moving average, not the 200-day. All right. And what I like to do is to answer your question. Well, I have this thing called the TTM trend. So the TTM trend was created to show you the trend of the market. So if you want to know what the trend is, it's telling you right there. It's red. What does red mean? Red means down. Red means down. Green means up. This is a week chart, guys. So when this, so just keeping it as simple as you possibly could, all the way back on this date, which is April the 18th. If you had just pulled up a chart and said to yourself, Joel says investing and trading is easy if you know what to look for. And all you had to say was green is up, red is down. Green is up, red is down. When Amazon went red, Joel says red is down. 20-day is down. 200-day is down. What direction y'all think Amazon was going? Down. But y'all wanted Amazon to go up so much because of the stock split. You took the fundamentals, but then you didn't add the technicals. I'm what you call a funda technician. Rare. I'm rare because I'm going to take a fundamentally good company. I'm going to look at the fundamentals and I'm going to add the technicals on top of it. It's going to give me the full picture. Fundamentally, Amazon is a good company in a bear market. That was about to have a stock split. Why didn't it go up? Because fundamentally, we're in a bear market. In a bear market, everything goes down except for oil. Okay. All right. 3 months ago, people said, Joe, I'm disappointed. I've gone on your What Would Joe Do app, and there's no trades to the upside. I said 3 months ago, all I said was oil. You don't need to know nothing else but oil. Oil. Everything else is going down. Oil is going up. So what else did you need? Well, I bought this stock and I bought that stock. What did Joel say? We were approaching a bear market and everything was going down, and the summertime was coming. Think about that. Fundamentally, when should oil be at its highest price? Oil should be at its highest price when people are using oil the most. When are people using oil? During the summertime. Why? Because of vacations. Because people are not in school. Okay. When are they using it the least? During the wintertime. Usually now it's crazy that natural gas is going up, but usually natural gas will go up during the wintertime. They'll take their money out of natural gas, and then during the summertime, they'll buy oil. How does Joel know this? Because I've been trading the market for 10 years. Okay. So fundamentally, I don't care how you felt about Amazon. If the market is going down and everybody's selling everything, it's going to go down too. I don't care how you feel about it. And then when you pulled up the charts, this was red. It was going down. You had 1 week, 2 weeks, 3 weeks, 4, 5, 6, 7, 8 weeks of red. Is it green yet? Nah. Until you get one green candle, and that represents 1 week of buying, then Amazon should still go down in value. It was very simple for me. It was simple for Noble. Noble pulled up a chart. Me and him been talking. He was like, man, I think, this market might be bad for the rest of the year. Maybe 2023, 2024, we might see the market go back up again. Why? Because we're making the market simple. Y'all are making it hard because you're listening to too many people try to tell you what they think about the market. And that's great for conversation. That don't make me no money. All right. Now, if Amazon does decide to go up, where can it go to? The easiest answer is the 20-day moving average. Because look at what it does at the 20. It dropped to it, went up, dropped to it, went up, dropped to it. Then it got below it, went to it, went down. Now it's below it. So it's probably going to go to it if we go to it. And I already know how much money you can make. Because what does Joel do? What, when, where, why, how? Why am I trading Amazon? Because of the stock split. The stock split is over. Why am I trading it now? Because I'm praying that it can go up. And I don't mean to, I'm not going after David. I'm not trying to put you on blast because I know that you're not looking at the market this way. All right. But these are questions you're supposed to ask yourself. If I was to buy Amazon right now, people are like, well, Joe, where should I get out? I don't know, blah, 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 blah. I'm like, well, first, it needs to go up in value. 2, what was I looking for? When I bought Amazon way down here, I thought that it can get to up here. Now we done gone all the way back to the price that I bought it at. Joel has to get out if I'm trading. As an investment, do I get out? You heard what I just said? As an investment, do I get out? Well, it's up to you. What's your time frame? Is your investment time frame 1 year, 2 year, 3 year, 4 year, 5 years? If your investment time frame is 5 years and you already own it, and 5 years from now it's going to be higher, then you should be buying more. Joel, I can't believe you got your kids buying Amazon during this period. Worry about yourself. My kids is good. my kids accounts is higher than some of you guys adults. Don't worry about how Joel is teaching his kids, right? Because I what, when, where, why. We have a process. We understand why we're buying it. My kids can lose everything that they have in their account right now, and they'll be good 10 years from now because they'll get in better investments. They're getting $100 a month. But guess what? They're not scared like you are. They got a cushion. They got a rich daddy that's going to protect them. And they're listening to him. Dad says, do this until I'm this age, then I can make my own decisions. But he says, work out, educate myself, work on my health, work on my investments, and you'll be fine. That's what I tell my kids all the time. I'm like, man, don't worry about getting that girl right now. That girl that you can't talk to right now, 3 years from now, you're going to be able to, you ain't even going to want to talk to her. Worry about your health, worry about your finance and your education. And as you get older, you're going to be all right, son. You're going to be good because your daddy knows the process. All right. And I want you guys to understand the process too. So can Amazon go to 139? That's what I'm looking at, right? Very easy. And then when it gets there, then you can decide, hey, can it get to here? And then can it get to here? Right? But we got to worry about going up first because we're in a downtrend. Now, let's say you wanted to swing. Now, we're spending a lot of time on Amazon because a lot of people were in Amazon. I'm going to breeze through the rest of you guys' stocks. Let's say you wanted to trade this in the next 3 or 4 days. I tell people all the time, stop trying to predict what's going to happen. You can't do what I do because what I do, it looks like it's easy, but I'm taking fundamentals, technicals. I'm looking at TV. I'm looking at charts, even though you're seeing me make a educated guess on what I think it can do. But what I want you guys to start doing is say, you know what? I want to make money, but I want to catch the ride of other people when they start to turn the market around, right? Because until you have $5 or $10 billion in the market, you can't move the market. And the market can move at any given point when somebody with money decides that they want to buy. If Amazon right now can turn their stock around if Amazon starts buying their own stock, period. There have been days where the market's been down and then you'll look up and something like Amazon will be up 5%. And you're wondering, why is it up 5%? Because they buying their stock. They can turn around the market. They can turn the stock around on their own. And you ain't going to get the memo of when it's going to happen. Stop trying to be smarter than they are. Unless you in the room with the execs and they talking about buying, which would be insider trading, right? You got to use the technicals to give you an idea of when they start buying. So when the technicals say buy, then you buy. So what I like to use is a strategy called the 513. All right. I usually will tell you guys to look at an hour chart, but I'm trying to make everything a little bit more simple. So what's the 513? The 513 is just a crossover pattern. When the crossover pattern, very simple pattern. Y'all don't even have to, I could charge y'all to do this. I was going to create a video. Why? You know what I'm saying? Why? I love seeing you guys make money. When you see a crossover happen and you see it go red and red, chances are it's probably going down in value. There's a crossover there. Amazon went down in value. There was a crossover here. Amazon went up in value. There was a crossover here. Amazon went down in value. There was a crossover here when I was telling you guys that was the first time that I made money. It went to the 200-day moving average. There was a crossover there, and then it went down. Then there was a crossover here where I was telling you guys to get in the market. When that crossover happened, what did I see? Well, Joel saw that his squeeze was going off and it was blue. Then as soon as you saw one grain candle, all you needed was one. You options traders that be trying to time the market. Oh, the market is high today, so I'm just going to buy some puts. Oh, the market is low today. I'm just going to buy some calls. Y'all can't trade. Y'all drive me crazy. Y'all drive me crazy because I'm like, what are you doing? All right. Look at how easy I'm trading. Every single time it crossed, I could have bought it anytime that day, and the next day I was making money. Look at this. Anytime it crossed, you could have bought it. Joe, should I buy it at 10 o'clock, 11 o'clock, 1 o'clock, 2 o'clock? Just buy it. Buy a put. The next day you winning. But y'all refuse to learn the technicals. Refuse. I don't need that stuff. I don't need the technicals. I don't need technology. All right. Look at this. Look at how easy it is for me to trade. No. Yes. Look, watch this. I'm going to swing this backwards wherever it stops. Wherever it stops. Watch this. Y'all saw that? I ain't know where it was going. Look at this cross. Watch this. Look at this cross. Cross, green, blue, win. Watch this. Well, this cross you probably couldn't have made no money, but it crossed back to the upside. Blue, green, win. Look at this cross. Even if you bought it here, it went sideways. Okay. But then watch this. Cross, green, blue, win. And that was when we had the uptrend. In a downtrend, it's going to be easier to make money to the downside, right? We got a cross here. Red, win. This is for you traders that want to make money in 5 to 6 days. Look at this cross here. Cross, red. But Joe, why didn't you buy there? It's blue. But that's red. Red, win. How come Joel makes money so easy? Because Joel says trading and investing is easy if you know what to look for. If I don't know what to look for, it's going to be hard. If trading is hard for you, it's because you can't trade. It's not hard for me. It's dumb easy. And I know I make y'all mad when I say this. And I want to make you mad because I want you to learn the correct way of looking at the market. This is not something that I created. Joel did not create the 5-8-13. You can go on Investopedia right now and type 5-8-13 or 5-13 or 5-8. You're going to realize that this is the preferred way of trading if you're trying to make money in the next 7 to 14 days. Whatever strategies y'all been using, you guys have not learned how to use the fundamental basics. And that's where I come in, right? Because I'm out trading everybody and I'm just going cross, red, go. But Joe, shouldn't there be a perfect price that you buy it during the day? No. Who cares? Now, if I'm intraday trading, it's different. Yeah, I want the perfect price because I'm intraday trading. If I'm swing trading, no. Don't care. Just buy it anytime during the day. It's red, bam. Doesn't matter what time you bought it here if you're going to see it drop like that. But y'all be worried about this. Man, I missed my entry. All right, I missed my entry. I got to get the perfect entry and the perfect exit. I don't have the perfect nothing. I just make money. Sometimes I make a whole bunch. Sometimes I make a little bit. All right. But I want you guys to do the same thing. All right. Very simple. You get under when it's bullish, when the 200-day moving average is up, it's easier to make crosses to the upside. When you get underneath the 200-day and the 200-day starts to go down, look how he just bouncing off that bad boy. Then crossing to the downside is the easiest plays. And it's harder to make money to the upside. But every time you do, look at where it's going. 200-day, 200-day, 200-day. Look, so easy. You shouldn't take Joel's classes. They're so simple. All he's going to teach you is the 200-day and the crossovers. You need to take this $10,000 class so you can learn about this, that, and the other. Okay. All right. Why? Because they're going to teach you how to get it, what, a millisecond earlier? You see the chart. Y'all see this with your own eyes. I like to pull up charts so that you guys can see it, how easy it is with your own eyes. Look how easy and clean my charts are. Look how clean that trade looks. Why doesn't this look clean on your charts? Because you probably got 10 to 15 things on your page that's stopping you from getting in a trade like this. That's easy. Or getting into a trade like this. That's easy. Or getting in a trade like this. That's easy. Easy. Hit the easy button. Okay. All right. Let me get to you guys' stock. So what do we notice today? Is Joel gonna tell you guys? Am I gonna put out an alert for you guys to buy to the upside? Joel, you ain't put out an alert to buy to the upside in 4 months. Well, let's go and look at what happened in the last 4 months. If I had told you to buy something in the last 4 months, you would have lost money. Now you understand why. But you're getting alerts intraday. Now, swing trading, I gave y'all this alert. Well, that trade is over. 7 to 14 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you ever done a consultation with me, I have said that consistently 7 to 14 days. You can use the hour chart too if you're using the Ichimoku. And that, my dear, is a bearish sign. Red, red, red. Should have bought your puts yesterday. Okay. All right. Let me get to you guys' stocks now. All right. Hopefully that was a learning lesson for you guys for free. Joel gave it to you for free. For free. All right. Bro, what do you think is going to happen with CRM? So CRM is Salesforce. All right. I made money on the put down, but it seems to be typewriting. 177.20 was the low so far. It also gapped up to the current level from 167. Wondering if it's going to gap back down and cover that 167. So let's pull up CRM. All right, we're gonna use the same day chart that has the 513 on it and the 200 day. Now, Salesforce at the time, I don't know if it's still $160 billion market cap. It might be lower, I don't know, but it's around 150 billion. PE ratio is still kind of high. PE ratio is the price to earnings ratio. So if you notice, the first thing I want everybody to notice when they're pulling up their charts is, are we in a bearish or a bullish period? This is bearish. 200 day angled down. 200 day angled down. Bearish. 200 day angled up. Bullish. Very bullish for like 10 years. Now it's bearish. Bearish is not good. We can go up to it, but let's look and see what's going on. So Salesforce, I'm going to pull up a week chart real quick just to get a broader look. And if you notice, I thought that under $200 was a very great buy for an investment. Why? But Joel, it went all the way to 167. You lost people $40. I'm like, has a year gone by yet? This is the definition of an investment is 12 months or longer. Joe, you've been wrong. You've been wrong. You've been wrong for 3, 4, 5, 6, 7, 8, 10 weeks. 10 weeks does not equal 52 weeks. Okay? Give yourself some time. You're trading. You weren't investing in the first place. If you're trading and you're looking for 5 to 13 day moves, what is trading telling you? Remember, what, when, where, why, how. What is trading telling you? Before we even look at this, have we had a cross to the upside or a cross to the downside? Let's answer that question. We got a cross to the upside. When did it happen? Y'all see, let me create my charts as we talk. The cross happened here. Joel came out and told y'all to buy Salesforce. Joel, how did you know to buy? You can see the future. I'm like, yep, I sure can. The answer is this went blue, this went green. Did I need a $10,000 class to teach me that? Nah. I just needed to listen to somebody that actually trades the market, that's willing to teach you how he made his fortune. Okay? Cross happened here, went green. This is blue. You can take a shot to the upside. How long? Remember, how? 14 days. But Joel, it's been 21 days. 14 days. 7 to 14 days. Trends do not go. I mean, this trend was a long trend. That's rare. But usually trends are 7 to 14 days. Cool off a little bit, then it'll move 7 to 14 days again. Cool off a little bit, then it'll move 7 to 14 days. You can see it in your charts. You don't believe me? A cross happened here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. Did I know you guys were going to look at Salesforce? No. I always perform this magic show because I want you guys to understand that that I'm a pattern recognitionist. My job is to notice patterns. And once I follow patterns and understand patterns, trading and investing becomes easy. I'm giving you guys the patterns. Markets, stocks move 7 to 14 days. 7 to 14 days. They don't move more than that. 2 weeks. Then it'll take a break. Then it'll move up again for 14 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. This one gave you 20. And then it cooled off a little bit. And when it cooled off, let's do the counting again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. Joel, how did you know that? Did you do this and prepare this before everybody came on? Nah, I've been doing this for a decade. Trading and investing is easy to me. I'm giving you guys the gems. It's up to you to take that and apply it to what you're doing. So we go to Salesforce. And we saw a 1, 2, 3, 4, 5, 6, 7, 8, 9-day run. That trend is over. How long will it possibly happen? Maybe for the next 7 to 14 days. That sucks. What's today's date? June 10th? Dang, we might not see Salesforce start going back up till July. That's how my brain thinks. Because not only are we about to make a cross, this is starting to go red. This is the best trending indicator you're ever going to find on the planet. It's called the TTM trend. Thank me for finding it for you. Okay. Called the John Carter TTM trend. True story. How was I able to find the John Carter? I tell this story all the time. You can even do the math. About, I don't know, 4, 5, 6 years ago, Disney came out with a movie called John Carter. At the time, as a scientist, I was going through all the indicators that were on, I was going through all the indicators on Thinkorswim. And it just so happens that I got to the J's, right? I was going from A to Z. And I said, dang, is this a sign from God? My sons want to go see this movie called John Carter. And here's a strategy called the John Carter. I knew nothing about it. No, I never read any books, didn't know anything about it. And from that day, I've been using it since that day. So go back and see when the movie came out. That's when I started using it. All right, true story. Anyway, so it looks like the trend is going down. Okay. So as far as your 167, do I think it can go to 167? I think it is about to go back down to 167, to be honest, especially with a very bad day today. And that gap that he was talking about is this gap right here. That's the gap. Y'all got to learn how to talk the language. A gap, guys, is when you have a gap in price. So gaps in price happens overnight. So let's say we closed at 165 and then the next day they say the war is over in Ukraine and all stocks gap up in price. That's a good thing if you're in that stock, but there's an 80% chance, guys, that a gap will fill. There's an 80% chance that we're going to get back to this level at some point. And from the looks of it, it looks like that's where we're going. How long will it take? Well, if CRM's average true range is about $8 and it can cover, half of that a day, so 4, 8, 12, it can get there in like 3 days. Okay? Really, really quickly. So for you guys that want to buy puts next week at the 167 strike, I see why you're doing it. And why is that a good trade? Well, look, we came up to these highs and we couldn't break it. These are those what's this called? The noble box. These are the noble boxes, right? If you drew a noble box, you would see that if you start breaking below that box, right, and you start to see a trend going down in value, we probably going to go down. How far can we go down? I feel like we can fill the gap, or you can use the good old Fibonacci retracement. You go to the lows, you go to the highs, you see that the 50% mark is here, the 75% mark is going to cover that gap. I think if it goes to here, we overshoot it, maybe go to this 163 area. And for you guys that really want to think about buying it, you should set your alert just like this. Create my alert. And bam, you see my alert. When Salesforce gets to this particular price, I'm going to get an alert. This says Joel Harrison. That alert is here. And when that alert goes off, I'll send it in the room and show you guys how it works. All right. But that's what I see with Salesforce. All right. Next question. Microsoft for a trade and an investment. All right. So trade, we know how to look at it as a trade now. So what I love about this chart now that I've created is you can see trades and investments at the same damn time. And I love that, right? Trades are going to be this 513. The 5 is going to be this white line. The 13 is going to be this red line. As a trade, it looks like Microsoft is going to the downside, the dark side. Okay. Looks like it wants to go at least to this area right here, which is 246, which is only $9 away. I'm even going to set an alert right there. Y'all see how I killed 2 birds with 1 stone? I do this session and I'm doing my homework. Y'all should be doing the same. All right, so if we get to this area, let's look at the week chart. Let's look and see if, where we are. First of all, let's do the beta times VIX. We know that the VIX is at 30 when you should be buying it. What did Joel say about betas when they're around 30? When it's around 30, you're going to get 2 to 3 times the move. So if I go and I look at Microsoft and I see that the beta is around 1.0, that means if I'm going to get at least 2 times that value, which that's 10% or 9%, 9 times 2 is 18. That means that you shouldn't be buying Microsoft unless it's at least 18% or lower. Well, when you go here and you check and see how much Microsoft is down in value, you're going to notice that the 18 that we're actually down 29%. So is that a good value to buy this as an investment? Most definitely. Okay. Anytime you can get a stock like this down double its beta, it's on sale, in my opinion. But for now, it still got red, as far as its trend to the downside. So even if it breaks to the upside, the first place it's going to want to go to for you guys that want to buy calls blindly, 283 should be where you're buying your calls. For you guys buying calls at 350 in the next 30 to 60 days, that don't even make any sense. That means this stock would have to go straight up. I get it if you're trying to buy a 350 strike 1 year or 2 year later. I get that, right? But I'm going to wait until we break this trend before I buy my calls to the upside. And I'm thinking about buying 1 and 2 year calls also, but we can't break this trend. I needed to break this trend and go green. This got a lot of people in March, but we hit the 20-day, we reversed, and now we're down here. But Microsoft is now down 30%. Until we break this trend and turn green, let's see if it's doing it on the regular 200-day chart. Until we break, y'all see this line? Until we break this trend, which we can't do, till we break this trend and hit like 271 or 272 and sit there for 2 or 3 days, I'm not buying my calls to the upside. Not yet, because it looks like it still has some downward pressure. 200-day is down. That means everybody's shorting every time it hits a trend line. Trades are easier to the short side when the 200-day is down. When the 200-day is up, it's very hard to short a stock. This is the best time to do it for you short sellers. All right. So as a super trade, it's also showing a cross right here. A cross is red. It's red. It's been red for 2 days. Okay. That's not good for Microsoft. So as a trade, looks like it's got some downward pressure. As an investment, yeah, anytime you can buy a stock like this 20 to 30% off, it's a great investment because it's a fundamentally good company, right? And technically, even if you're wrong, let's say Microsoft drops, and never goes back to its highs, it's going to see its 200-day. Most stocks are going to see its 200-day moving average at least one time in the next 365 days. So you should see it pop to about $300. From where it is right now, if it's a $250 stock and it can move $50, that means it can move 20%. If you wanted to know the exact amount that it can move, you could go to the area or the price where it is now, kind of gauge where you think the 200-day will be when it gets there. And then it tells you right there, that's about a 15% move. So now I know before I even take the trade, realistically, how much money I can make. If I got 10,000 on it, I can probably make $1,500 off of my 10 grand from where we are right now. But it might take 3 or 4 months for that to happen. Y'all see how I've walked through the whole process before I've even hit the buy button? You guys need to start doing the same thing. Okay. All right. Andre, you already gave us one, but because everybody looks at Apple, I'll go ahead and pull up Apple. Apple as a trade, 513 cross as a trade, downside. As an investment, look at that, guys. Apple's 200-day moving average is still intact. But is Apple on sale? Well, Joel says that if you do the beta times VIX, VIX is at 30. That means it's going to be double its beta. If the beta of Apple is 1.1, which is 11%, let's just say 12%. 12 times 2 is 24%. You should be buying Apple 24% off. Let's see if we're at that 24% area. When you pull up Apple, if I go to its highs, and I go to where we are right now, we are exactly 24%. Y'all see that? There's a reason why we there. Okay. The VIX is kind of telling you where it probably is going to be. Okay. You guys can figure out where a stock can be before it even hits it. If you looked at Apple at its all-time highs before we even got to 138, and you said to yourself, man, if the VIX ever pops to 20 or 30, we probably going to see Apple around 138. Let me just set my alert. Y'all see these alerts here that I've already have set? Set your alert. When it gets there, you already calculated everything before it even happened. Okay. Let's look at Apple from the stuff that I have. So Apple's a $2 trillion company. This was 18%. This was 27%. So Apple is on sale. If you want to buy it as an investment, this is when you need to be buying Apple. Can it go lower? Yeah, it could. It can drop all the way to here. It can drop to these lows. It can drop to 116. As a trade, it would be a terrible trade if you're trying to go to the upside, because this says downtrend is down. As an investment, though, 1 year, 2 years from now, even if we drop to here, in a year's time, we should at least come back up to the 200-day moving average. Can't pull it up. This is a flaw in the chart where I have to draw a line to be able to see it. Apple will probably see 160 again at some point. Why? Because a stock will go back to its 200-day at least one time in the next year. All right. So if Apple goes from 137 to 160, how much money can you make? About 16%. Okay. 16%. All right. That's a pretty decent amount of money that you can make on Apple. And that's being conservative. But Joel's not going to buy that trade until this starts to turn green. You could have taken a shot here, which a lot of people did, but the market just did a fake out. So even if you were taking this trade and you saw a cross here and you got in right here around 145 and it went all the way to 151, you should have had a stop at break even. So you should be out. You should have been out of this trade yesterday, which is why the market sold off like it did, because there were so many stops in place that the market were hitting all of those stops. Because real advanced traders like myself, this is how we're looking at the market. Ooh, excuse me. All right. So Christopher John said, hey, Joel, what's going on, brother? Let's look at XOM options. We already looked at Amazon. XOM. What's XOM, guys? It's oil. Oil. The only trade I told you guys to buy. Well, I told you guys to buy SoFi when we hit the lows, and I told you guys to buy oil. All right. So SoFi was the only stock and the only options play that I gave you guys. And you should have made a whole bunch of money in oil. So if you don't like Exxon, you can also buy Chevron. All right. So Exxon. Look at Exxon. I told you guys there was so much money to be made in this, because we were, you remember the last time I came on, I said, guys, oil is moving up in value. And what did I say specifically? I said, and it's not even the summertime yet. It's not even the summertime yet. Oil usually peaks during the summertime. I'm going to say that again. Oil usually peaks during the summertime. Oil usually peaks during the summertime. And then it picks up again in November. Why? Because that's a traveling months, right? Thanksgiving, Christmas, right? You'll see a little spike. Then it'll go down a little bit and people will start, they'll sell it off and then they'll start buying it again around February, March, trying to get in front of the crowd before June. Because when you're buying investments, the investments don't work, or trades don't work when it's happening. You try to get in front of it. All right. But right now, Exxon is higher than its 4-year highs. If you were looking at it here, Yeah, I know I tell you guys 7 to 14 day runs. This bad boy been running when it crossed here. This was the easiest trade on earth. Anytime you see oil cross like this and it goes blue, look at this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19 days of making money easy. Easy using the what would Joe do method. Easy. Using the 513 cross, which is on Investopedia. They tell you how to trade. What's happening right now? Started to go red here. Should you be concerned if you're in oil? No, because until this starts to turn down and it crosses, you're fine. Okay. But I know it's way up there. It's way up there. Should you be buying now? I think you're a little late. All right. Should you be shorting now? If you came to me and you said, Joel, the only time I respect a person that's shorting is not when they say, I have a feeling. If you come to me and you say, Joel, fundamentally, oil usually, peaks during the summertime, and we broke a trend to the downside. And on the technical side of the market, I started to see it go red on the Carter. I'm going to respect you more as a trader. You come to me and say, oh, I got a hunch because, I've been watching these patterns for like 4, 5 years, and it usually peaks on this month, on this day. I'm not really into that. You got to show me a little bit more information. All right. But it looks like it might be the end of oil. We might have seen oil peak. So what I like to do is when I see stuff like Exxon, I like to see this, and then I also like to see what's going on with Chevron. And Chevron should be showing the same pattern. And as you can see, we hit an all-time high 3 days ago. Still hot though. Cross happened here, easy trade. Look at this easy trade to the downside. But when it crossed though, you only had like 2 days to make money. Then a hammer formed. Then as soon as it started to go blue again, remember when stocks are bullish, it's easier to make money to the upside than it is to the downside. I see you guys do the opposite. Why the heck are y'all trying to short something like oil that's bullish when you can short Apple, Amazon, Google, Facebook, and every other company on the planet? Y'all make trading so hard because you don't go with the trends. When things are going up, go with the things that are going up. When things are going down, short the things that are going down. That's how you make money consistently in the market. Not saying, I hate Facebook, so I'm just going to short it. Well, it's a great time to short it now because the trend is down. But during the last 10 years, it was not a smart move to short Facebook because it was in a very bullish trend. If you want to short something that's struggling. Oil ain't struggling. It ain't. It's not struggling. It's easier to make money. Think about it. Look, watch this. When oil crossed here and it went blue, look at how easy it was to make money. I'm just going to short it, Joel. It crossed here. Look how hard it was to make money, even though all that's red. Why? Because oil's in an uptrend. Why are you shorting things that's in an uptrend? Because you don't know how to trade. That's why. Short things that are terrible. Okay. Because even on this short, you only made money for 2 days. It was a lot of money, but it was 2 days. And then it went sideways. And then even if you got these little easy little crosses here, you ended up doing well. Because when a stock is in a uptrend, it's easy to make money. It's just like during the 2020, after the March lows, it was easy to make money in any stock that you threw a dart at because the trend was up. But now that the trend is down, guys, you shouldn't be trading to the upside unless a couple of things happen. Stocks hit their 50% point or their beta point, right? And then they cross, and then you see the trend happening. And even then, Even then, even though I called one of the best trades in the last 4 or 5 months, it only lasted for like 6 days, 7 days, because we're in a bear market. In a bear market, it's hard to make things to the upside. It's easier to make money to the downside. Learn how to hit the easy button. Yes, this looks like it wants to cross. Is Joel going to short oil? Heck no. Heck, look at this 200-day. I'm not shorting oil. Only traders that don't know how to trade, and I say it all the time, and I make y'all mad. But then I'd be like, all right, show me your account, show me your receipt, show me that I am wrong. I ain't showing you that, Joel, because you probably ain't making no money. Because you're trying to go again, you're trying to be the black sheep. You don't want to be the black sheep in a market like this, like, or the stock market. You want to go with the trend. You want to the stock market is the ocean. I'm not gonna go against ocean waves. I can't beat a wave. I can go with the wave and swim faster. Y'all want to go against the waves. That's why y'all struggle. All right. And I talk this way because you guys need to understand this. And if you've been doing it the other way, I promise you, you're probably making it harder for yourself. All right. Let's look at some of those options. So when looking at Exxon, even if I was trading to the upside, I want to look and see I want to see some unusual options activity. All right. So I'm going to pull up volume and I'm going to see where everybody's buying these options. But I'm going to go out about 2 weeks. I'm going to go out to July and see if people are still bullish or they're bearish on oil. Well, check this out, guys. There's actually more volume on the put side than the call side for July. Interesting. I don't see any volume over here that's in the 5,000 area, but I see a whole bunch of 5,000s over here. And the market moves by orders. Okay. Something to think about. This move of oil going down might be real. We might be hitting short-term lows in the stock market, and we're about to turn back around again and start going up again, which I wouldn't be surprised if that happens. I know there's a lot of conflicting things that are happening, but this is the kind of stuff you want to look for to kind of gauge. Like, I'm not going to base everything off of this, right? But it's something to think about when you're looking, at the market. I never buy call options if I see put options that are higher. I won't take that trade. And that's what's kept me in this particular game. I'm going to go with where the most volume is. All right. Cool. All right. So let's look at Nvidia. Nvidia, guys, is the number one semiconductor company on the planet. A semiconductor company is a company that makes it's literally the heart of all technology. All your technology, your phone, your computer, your electric vehicles, your cars, cryptocurrency with mining, they all need chips. And this company is the leader pretty much in all of those different areas. It's the I always call it the Beyonce of semiconductor chips. And I try to make it exciting because a lot of people should be talking about Nvidia the way that you talk about Apple. I absolutely love this company. I absolutely love it. All right. So when if you're looking at Nvidia short term, it was a short term move to the upside. If you had bought this and you had bought 7-day options, 7 days out, you would have made money immediately, right? Soon as it crossed, it went green. You would have been in the money, in the money, in the money. And then all of a sudden, oh my God, it petered out. And now we're crossing again. And now it's red. Not good. Where can we go? Where this alert is, that's where we can go. Okay. As an investment, the 200-day is still intact. You can say that it's going down now. But when I look at it on a week chart, this is what I see. Now, on the week chart, The 20-day is angled down. So if Nvidia goes up in value, it can still go up to 217. We can also fall to this value right here. Okay. So make sure you put an alert for yourself for the 135 area. I'm going all in if we hit this 113, 135 area. And I can't wait because I got a lot of money sitting on the sideline waiting to buy something like this. Can't wait until we get there. Does that mean I have zero Nvidia? Nah, I got a lot of Nvidia. I got about $30,000 or $40,000 worth of it. But I plan on buying maybe $100,000 more if we get down to this particular area. Then I want to see some signs of it going down. So even if it hits the 130 area, I might buy a small piece. And then if we can break that trend and go a little bit to the upside, I might buy some higher. But I'm thinking about getting it at 150 because if I have one, or let's say I got 200 grand sitting in Nvidia, and then one day it gets all the way back to 350, I done made another 200 grand. I can go buy an investment property with that, right? And it might happen fairly quickly. It might take a year or two, maybe a year. Okay. But it can give you an idea of what this stock can actually do. All right. I already answered that. Is the trade for XOM over? I don't know, but it looks like a lot of people are buying puts. Boy, Andre got all the questions going on today. Can you give a VIX chart on when to buy and when not to, and when we buy, how long do we go out per VIX? Hold on. All right. So what he's talking about is the volatility index. Again, y'all need to buy that volatility index video. So, I forgot where I stored it. All right. All right. As you can see, if you can see my charts, right here, this says add to investments. Add to investments. So that means anytime the VIX hits 35, Joel adds to his investments. Now, why does he do that? Because check this out. When the VIX goes up, the stock market goes down. When the VIX goes down, the stock market goes up. 35 is like the kind of fear that I like to see where everybody is throwing up and puking stocks. And if you notice, we're looking at a week chart. Anytime we hit 35, this is only 2 weeks. And what's 2 weeks, guys? 14 days. Y'all seeing how it's all coming together? Then every when it happened for 14 days, market started to go down in value. Then it hit 35 again, market went down in value. It hit 35 again, I'm sorry, I know I said market went down in value. The VIX went down in value, but the market went up in value. Remember, when the VIX goes down, the market goes up. When the VIX goes up, the market goes down. When it usually hits 35, that's usually when the market is down 2 times. So remember, when the volatility index is around 30, whatever the beta is, like let's say the beta is 1.0, which represents 10%, that stock is probably down 20%. So anytime you see the VIX hits 35, most stocks are down 20 to 30% if you're buying high beta stocks. You buying a stock that's got a 2.5 beta, it's probably down 50 to 70%. Okay? And that's when you should be adding to your investments. Y'all see how it hit 35 and then turned around almost like magic, like magic, like magic, like magic. And now we're sitting at 28. We hit 35 back on May the 2nd. Joel loaded up. Remember when I was telling you guys to buy Amazon and buy all these other stocks? Why was Joel telling you to do it? Because Joel has a strategy. I don't just buy things just to be buying it. I have a strategy I've been using for over a decade. All right. This is what you need to look for. We rarely hit 50. 50 is like pandemic, like, a bomb goes off somewhere, but that's not happening right now. So 35 is kind of like that area where the market is really puking up stock. We actually thought that the VIX was going to drop back down to about 19. So that's the spike that we just recently had. It might be over. You know what I'm saying? But we don't know. We never know. But it looks like it's just hitting this trend and going down and down and down. But when it gets to here, we need to be careful because then the VIX might decide it wants to start spiking again once it gets to that 18 area. So be careful. All right. My cousin's on. He says, "What up, cuz? Give him the game. Fire." I'm buying. Somebody said they're buying all the stuff that we're talking about. All right, let's look at ChargePoint. So what is ChargePoint? ChargePoint is, so you got the infrastructure bill. I don't even know how that money is working. I don't even know if that money is being distributed yet. But a lot of electric car charging units that are being created by companies like this, they're getting a lot of money from the infrastructure bill because we want to change the infrastructure in America to be able to accommodate all the electric cars that are coming out. ChargePoint has been on fire lately. But what do you notice about this chart? It's been on fire, but we just bumped up against the bottom. All we did was we just bumped up against the bottom of this trend line. This trend line that's been going since December 2020. Y'all see this? All we did was go up to this trend line. Now let's look and see where it is in comparison to its 200-day moving average. And look at that. All it did was it's getting close to its 200-day moving average because a stock is going to go back to its 200-day at least once or twice in a year. So if you're in ChargePoint, I think $17, $18 is it can get up to this 20. But remember, the 200-day moving average is still angled down. So when should you have bought this? If you were keeping it simple and you were using my method and you said to yourself, trading is easy, 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 trading is easy. But Joel, trading is hard. No, it's not. Joel said trading is easy, trading is easy, trading is easy, trading is easy. And then you open your eyes and you say, you know what? Cross right here. Joel says trading is easy. Green, blue, trading is easy. Dang, trading actually is easy. The last time it crossed over here, it went red, it went down. It crossed here, it went up. It crossed here and went blue, it went up. It crossed here and it went down. Why was it so hard to make money to the upside here? Because the 200-day moving average is angled down. It's easier to make money to the downside when the 200-day is angled down. Shorting this made you so much more money than it did to the upside. Now, let this bad boy turn around. You're going to see the opposite. The moves to the upside are going to be vicious, and they're going to be short sell-offs because that's how the market works. You got to understand what type of market and environment you're in so that you know where to position yourself. Traders, if 90% of your trades have not been shorts, you don't know how to trade. You don't. 90% of your trades should have been to the downside. Okay? Even intraday. Okay? And that's where all the money is being made in the last 6 months. Doesn't mean that you can't invest. All right? Because investing is 1 year, 2 year, 3 year, 5 year. All right? So ChargePoint has some momentum to the upside. It might end when we get to 18. But look at what we just formed, a red candle on the TTM trend. Now, if you want your charts to look like mine, you got to, watch this video over because this is not the default setting. All right? I just want to make sure that you guys understand that. All right. Let's look at Disney. I love Disney as an investment. Disney, short term. What is it doing? Short term, red, red, down. But we're already at the lows. This might be the day it turns around. We might wake up tomorrow. We might wake up on Monday and the market is up in value. And we got a gap right there. I love gaps. That means we probably going to fill that gap to the upside. As an investment, though, should you be buying Disney? Of course you should, even though the 200 day is angled down. Now, what is Disney's beta? Disney's beta is 1.2. What's 1.2 times 2? 24. 24 or 2.4. It's 24%. You should be buying Disney only if it's 24% off. So when you go over here and you look for where that 24% area is, well, this was 36%. Should you be buying Disney now? Do you think it's on sale? Well, Joel says it minimum was going to be down 24%. So if it's down 36%, heck yeah, this is a great time to invest in Disney, even though it can go lower. It'll be 61% if it gets to the 79 area. Okay. So what if you bought some way up here at 140 and it gets to 80? We're talking about 1 year, 2 years, 3 years from now. We're not talking about 1 month, 2 months, or 3 months. That's trading. Y'all be mixing trading and investing up. That's why it's hard to make money. There's trading, then there's investing. There's investing, and then there's trading. There's medium-term investing, there's long-term investing. There's intraday trading, and there's swing trading. There are differences. When you understand which one you're doing, trading and investing becomes easy. Okay. Short term, again, down. Look, red, red, down, cross. It just crossed 2 days ago. Isn't it interesting that just about all the stocks you're looking at are crossing at the same point and going red on the TTM trend? When you see every stock doing that, guys, you should be scared. It also lets you know that the market don't care about that stock. It don't care about Disney no different than it cares about Apple, because when people sell, they're selling all of it. They don't care. I want you guys to understand that. Penny said, hey, hey, hey. David asked, do you show us how to set up the 5 and 13 in your chart setup video? No, I do not. It's something new. All right. I should do a new 513 video. I probably will, probably before I go on vacation next month. It'll go to my ultimate members for free first. Then I'll probably put it on PayHip for anybody else that wants to buy it. But I mean, this is what you get with it. I mean, it's not really too much to it. You literally can go to Investopedia and it'll tell you how to use it as a trading device. I love it. I really, really love it because I don't have to show the hour chart anymore. I used to love to pull the hour chart up, but people were switching from the day to the hour to the minute and they were getting confused. So now I literally can use 2 charts, a day chart and a minute chart, and I can do everything that I need to do. And because, I want to make trading and investing as easy as it possibly can be, it just helped me. All right. Someone asked INF as an investment in phase. So I know the company, but I don't know what they actually do. But I don't need to if I look, it's an energy company. So all energy companies have been doing well. Looks like I've analyzed it before. Let's see if I got, okay, so let me erase that. Now, what do I notice quickly? 200-day moving average is intact. That means it's not going down. So what does that mean? That means when it's flat like that, you can take shorts and longs. But if I saw that this chart was going up, I'm only going to take trades to the upside. I'm not going to short this company. If the 200-day was angled down, Then I can decide if I want to short it or not, because I know that when a 200-day moving average is up, I'm going to show it to you guys because y'all don't believe me until I show y'all. It's so much easier, people. It's so much easier to get a cross and make money to the upside than it is on a cross. Now, that was some good money, but you knew where it can go. But it's still easier. Look at how much money you would have made to the upside. But then when you made money to the downside, it was short-lived. Then when it crossed again, you made a whole bunch of money to the upside. And then it was short-lived to the downside. Why? Why is this, Joel? Because when the 200-day moving average is angled up, is bullish. Bullish companies have a higher chance of making money to the upside than to the downside. Can you make money to the downside? Yes. But if you're struggling as a trader, stop being a counter trender on good companies. Y'all make me angry doing that. Y'all out here shorting. I mean, now you should be shorting Amazon and Google and Microsoft, but you shouldn't have been doing that a year ago. Okay. Now you're doing it, but I hope that you're not creating bad habits now that's going to bite you in the butt later when the market starts to go up in value, because the bears are having the time of their lives right now, but everything always shifts. And if you don't know the type of environment you're in and why you're making money, you're not going to make money consistently. I've seen a lot of people make a lot of money in the last 3 months. I don't want to be a Debbie Downer, but can you make money to the upside and downside and be in the right trades to the upside and downside? That's the only way you're going to get some respect from me, right? If you're in the stocks that are up when they're going up, and then you're shorting the stocks that are down because the charts are telling you that they are going down. Okay? Yes, you can make money here on a crossover, right? And you can make money here. But are you saying to yourself, this might be short-lived? Joel did say 7 to 14 days. So if I get a 14-day run, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, and you start seeing it cross, you know that it's about to explode to the upside. Because if I can get a 23-day move to the downside, oh, I'm about to get 30 to 35 days to the upside. Because when stocks are in a bullish pattern, they're going to make you more money than it is to the downside. And then it's vice versa in a bear market. And right now we're in a bear market. So trades are very short to the upside and very long to the downside until we can get that 200-day moving average to turn around. So what do we see right now? Right now is very bullish. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. But it's 17 days in. 17 days in, and now it's going red. Be careful if you're trading this. As an investment, great investment. 200 days angled up. Okay. All right. Someone said, got to get your expert take on AMD as an investment. I already am going to tell people to buy AMD as an investment, because remember, guys, there's a semiconductor shortage. That means companies can't even, if you're thinking about supply and demand, companies can't even create cars. Like if you try to order a brand new car right now, I don't care what company you're going to, you got to wait like 6 months for a vehicle. You got to wait 6 months for a Tesla. My brother got an order in on a vehicle. He's been waiting for 3 months on his vehicle, and it's not electric. So the reason for that is because there's a semiconductor shortage. You need semiconductors for all of this particular technology. So because of supply and demand, and because the semiconductor companies, now if the semiconductor companies were at all-time highs right now, then I would be telling you guys, it might need to cool off. But check this out. AMD, first of all, AMD is 143 billion in size. But let's look at AMD as far as its beta. Its beta, guys, is 1.8. Let's just do the calculations for that. Where's my calculator? It's 1.8. That means, guys, that's really 18%. That means in an average market, AMD goes down 18%. Y'all know that? In a regular, just basic market, AMD will fluctuate 20%. So what do you expect it's going to do when the volatility is at 30? It's going to drop 36%. Anybody that's in AMD right now, when it dropped 30%, you shouldn't have sold it. You should have been saying, this is what this stock does. It's got a high beta because it's got high growth potential. It moves. So let's average that up to 40%. So if you know that AMD can drop 40%, and you see the stock is sitting at, and you see that the high is at 164, and you know that it can drop 40%, the quickest way to figure out what the value is to multiply it times 0.6, because 40%, I'm just taking 100, 40%, if you add 60, that makes it 100. So I'm going to take 164 and multiply it times 0.6, and that's where you should be buying AMD, right around the $98 area. That's on sale. Well, look at what value we at right now. 95. So you should not even have been thinking about buying AMD until it got to 98. And check this out. Where do you think everybody else was buying it at? Why was everybody buying it at 98? Is there something special about 98? Yeah, there's something special about 98. Investors like me, the 1%, we're using calculations. We understand that this is all a game. The investing side is all a game. There's the operations of the company and there's their investing side. The investing side requires numbers. Any investment requires numbers. Any realtor you ever talk to that bought real estate, there's always a number. What's going to make this firm invest in this company? Why are they going to put 3 or 4 billion in it? A, it's got to be a fundamentally good piece of real estate, or it's got to be a fundamentally good company. Well, where are you going to buy that fundamentally good company? Well, Joel, I only want to buy it when it's 20 to 40% off. Where did you get 40% from? Well, I want to buy it during a sell-off, and I know that the beta is around 2%, so I kind of want to buy it in that 40% off range. Okay, that's where you're seeing people buy it. Why is it hanging around this price? Because everybody's been buying it at 98 ever since January, including myself. Now, why you guys don't know about this? You need to hang around real investors. I was a real investor in real estate. I'm a real investor in stocks. I know what to look for. All right. The 200-day was angled up. Anytime you see a stock where the 200-day is angled up, you're supposed to buy sight unseen when that beta hits. And that's what a lot of people did. And they were able to ride it from 100 all the way up to 132. Imagine getting a 32% return, and all you did was a simple calculation. You paid $25 to learn from Joel. As an investment, you still want to stick with the company because fundamentally what's going on in the market, we got supply and demand. There is a supply shortage of semiconductor companies. Semiconductor companies have become the what's the word I'm looking for? It basically moves the market. People watch what the semiconductor companies are doing because it's moving the market up and down. This is what they're looking to first. The Nvidias, the AMDs, the Microns, the Intels, they're looking there first. And then when they turn around, the market starts to turn around. When they start going up, the market starts going up. They started going up a little bit earlier than the market. When the market started to turn around, it was right around this time, but the semiconductors started to turn around right around that May area. It started to cross, and then where did we go to, guys? Keeping it as simple as you possibly can. We're trying to get to this 200-day moving average. Now, this is what I like also. Guys, today might be the lows because I'm looking at the charts And I'm seeing support areas on a lot of our charts, all in the same area. So this might be a scare tactic to get everybody to sell today. Because look at that. Look at that channel. That channel is perfect. But it is crossing right here. It looked like it wanted to cross right here too before going up higher. So if we get a big day on Monday, we might reverse what's happening, and then we might try to shoot to this upside here, which is going to match this 200-day moving average right there. Okay, which is going to be the top of that particular channel. All right. All right. Someone asked, what percentage are your options versus shares? Okay. Well, first of all, if you're doing, so I'm going to be honest with you guys, most of my options, the longest my option will be is a year. And because it's like 11 months to a year, I count my options as trades. Now, because I have a because I consider them being trades, 90% of my assets is still going to be in investments. 10% of it is going to be in trades. All right. And then within those trades, my trading account, let's say I got $1 million, right? And I'm trading $100,000, right? Even out of that $100,000, I won't put more than $20,000 in any given trade. Now, to answer your question, sometimes all of my trades are options. Sometimes I mix it up. Sometimes I'll buy some stock. Sometimes I'll buy some options. My trading account is a little bit on the, it's not consistent in the way that I place it, but the consistency comes from how much I use to trade. So if I have $100,000 over here, I'm not going to spend no more than $20,000 per trade. And to be honest, I want you guys to keep it in the 10% range. So even if you have a $10,000 account, because I know most people don't have a $100,000 trading account. If you have a $10,000 account, you shouldn't be taking options no more than $1,000. You shouldn't be putting more than $1,000 in any given stock. All right. If you keep it that simple, if you blow up an account or if you blow up on a trade like I did with Jumia, it's not going to blow up your account and you'll still be able to live to trade another day. All right. Hopefully you guys got that. If not, go back and watch the video. It'll be towards the end because I'm about to leave in about 5 minutes. Again, I apologize if I wasn't able to get to everybody's stocks, but I haven't been here in a while. I wanted to kind of show you guys what I'm doing, but I also wanted to show you guys how you should be approaching the market because you guys are all over the place. And it gets frustrating for me because I have all of these free videos. You can go to my YouTube page and I try to walk you the most simplistic way of looking at the market. But for some odd reason, y'all want to be more advanced. You want to be more advanced. And I'm like, guys, learn the fundamentals and the basics first. Talk the language. Because if you can't walk through and understand what I'm showing you right here, there's no need for you to get any more advanced than you think that you should. And I know you feel like you have to, and you don't. Everything that I'm showing you guys is what I use. I don't get more advanced than this, but this is high level simplicity. Okay. It's high level simplicity. Again, Asia was asking what indicators are crossing. The indicators that are crossing is just two simple moving averages. If you go into Investopedia right now and go to the 5, 8, 13 cross, it's just the 5 period and the 13 period. Simple moving average. That's it. And then I have a 200-day moving average as well. And you guys already know about the TTM squeeze and the TTM squeeze and the TTM trend. Oh, actually, I'm gonna get to everybody's questions just like that. Upstart versus Block. All right, so Upstart and Block, guys, they're not the same company, same types of companies. They are fintech companies, and fintech was in favor for a while. Fintech is like finance companies, like banks that have technology involved in it. So think of Visa as being like old fintech, and then new fintech is like Square and PayPal. Well, Upstart has this buy now, pay later format. And with the market doing what it's doing right now, you have a lot of people that are afraid that people are going to default on these particular payments. So companies like Upstart are doing terrible. And then it's funny that Square or Block has nothing to do with buy now, pay later. Maybe they own some companies in that space that I don't know about, but they're getting hit just because all of the other companies are getting destroyed. Now, this is what we call this company just barely made it out of the penny stock value area. So, I like these companies in a bull market. I do not like companies like this in a bear market. It's the first companies that I would sell. They were great for trading, terrible for investing, at least for now. All right. But this stock has dropped tremendously. I mean, it's dropped from $400 to 38. Anytime you see a stock like this with a super high beta and a very low market cap, when the market starts to sell off, this is the first kind of stock to sell off. So you guys got to understand that when you see it. As far as your trend is probably down. Stay away from this. If you're in it now, I apologize, but you know, when you're in a bear market, it's harder to make money to the upside. You see, when the crosses happened here, they were short. But when it crossed to the downside, you made all your money. Anytime it crossed to the downside, you made all your money. Because when the market is going down, you make way more money trading to the downside than you would to the upside. There will be days where we make money to the upside again. It's not today. It's not next week. Chill, guys. This is an investing period. And if you're trading, you best be trading to the downside on pretty much every other company. If you want to trade to the upside, you should be trading energy, oil, period. Okay. Commodities. All right. And this is what we've been screaming from the mountaintop for the last 3 to 4 months. All right. And then Square will be the last one. And then I got to get out of here. Square Block. I love it as an investment, as a trade. Terrible. You could have made money here. You could have made money here in March if you had bought Square. It went from 115 to 150. That was a decent move. Look at this. It went from 15 to, what's that, a 32% return? But you're going to make more money to the downside. Look at that. Look at all that money. Look at when it crossed to the upside. I had a bunch of people call me and say, Joel, it crossed to the upside? Is it time to get in? Nah. It was short-lived. You didn't even make money the next day. But look at this cross to the downside. That's scary. But if it starts to run, it's going to run. I wish that we saw previous lows, because then, like right here when it crossed, it was easy to make money to down here. Very easy short. But now that the short is down here, it's like, all right, I can make money from 71 to 64, but I don't see anything after that. So, be careful if you're deciding to short Square right now. I still believe it. I still believe in Square as an investment. I still believe in Square. I hate when I have to do that. I still believe in Square as an investment because look, Square came from $289. And guys, remember the March lows? Remember when March happened? This was 2020. This is March 2020. The lows of 2020 was $31. I already have an alert set here. The highs before the pandemic happened, Square was sitting right around $82. That means we're lower now than we were before we even knew a pandemic was going to happen. So does that mean that Square is on sale? In my opinion, it is. All right. All right. So that concludes as the trader. For you guys that need one-on-one help, you can always book a consultation with me. Take advantage of my hours now. My hours have opened up from 11 till 6 o'clock, Monday through Thursday. Book through my messenger. I've been doing consultations every single day. All right. Y'all have been keeping me busy. But at some point, it's going to go away again. I'm going to become an Uber and I'm going to have to drive my kids everywhere again. And then I'm going to be limited on the amount of time that I have to give to you guys. So take advantage while it's here. If you're struggling as a trader or an investor, take my classes, book a consultation with me. I promise you, you're going to see the market better than 99% of people that are out there. And it doesn't mean that you're necessarily not going to make money. You're going to at least understand why you're losing money. And that's always the number one goal. What, when, where, why, and how. As long as you know why you're losing money, then you can say, hey, I can switch the strategy up or I can extend the strategy because I know why I'm doing it. And that's the problem and the issue that most of you guys have. But on a positive note, when you get that education, when you start understanding the market, when you start looking at your charts and adding the fundamentals plus the technicals and become a funda technician and start increasing your equity every single month, and then after 2 or 3 years, you see that you're moving forward and not backwards or staying stagnant in a market that's going up with inflation, then you're going to feel great about, how you're positioned in the market. I used to get so upset when I saw my stocks drop 10, 15, 20%. I don't care anymore because I know how to trade. I'm offsetting these losses with the trades that I'm making over here. And then, at the same particular time, when the market starts to explode in value, it's almost like icing, it's just like icing on top. And I want you guys to feel the same way. So I'm coming to you guys from Decatur, where it's greater. Enjoy the rest of your Friday, and I'm out of here. Peace.